What's up, everybody? Erik here from ES Invests, and I am here with my good friend Carley from Carley Trading, and we're going to talk to you about the COT report and run through some best practices. We have a video that we have already done introducing the concept to you all on Barchart's YouTube channel, so go check that out for the basics. We're going to get right into the meat and potatoes, but before that, as you all know, where would we be in a financial video without a disclaimer? So this is essentially saying I am not a financial professional. I am just a dude that talks on YouTube. So you should take nothing I say that seriously, but hopefully Carley will be able to class us up just a little bit and we'll be able to tap into her world of experience. This is definitely her sphere, her world. So we're going to have an opportunity to really dig into some great best practices for the COT report. But to start us off, Carley, welcome in. Great to have you.
Thanks, Erik. It's always good to be here.
Pleasure. So the COT report, there's a lot of, different information out there on the Commitment of Traders report, but I would love to simply start with, how do you like to use it?
I mean, to be honest, you could write an entire book on the COT report. There's just so much going on there. But I am of the mindset that keeping things simple is the only way to go, especially when it comes to the COT report. I've been a commodity broker since the early 2000s, and the one thing that I've learned is long-term survival depends on, well, it's the key to long-term survival, I should say, is really not getting into trouble when markets get overheated, bubbles. Maybe in extreme situations you could categorize them as bubbles. But when markets get overcrowded, trades get overcrowded, they're an accident waiting to happen. And so what I use the COT report for is to try to avoid getting caught up in the herd, getting too complacent, and even looking for opportunities to maybe put on some counter trend or counter narrative positions if the COT says it's time to do so. I generally use, like, as far as time frame goes, I'm generally using it weekly COT charts, and I love that barchart.com allows traders to plot the COT indicator at the bottom of the chart. If you go to the government website and look at the government numbers, it would take you, I mean, I can't even imagine how much time it would take you to go through all the data and figure out what's going on. But if you pull up a chart and you can see visually where traders are positioned, how they were last week, how they were 2 weeks ago, how they were 2 years ago, it gives you a really good guide as to what you're looking for. And it's tricky because each market's different. Some markets, for example, in crude oil and gold, speculators are perpetually long. And so it's more of a question of not if they're long or short, but how long they are and if they have extra buying power on the sidelines to put together. I personally focus on the large speculator group of the COT report. And the reason I do this is, in order to qualify to be part of this group, you have to be trading a big position size, a big account. And I think we can assume that if that's the scenario, hopefully you are qualified to be known as the smart money. And so that's a group of traders that I like to follow. Even the smart money, though, they're humans. Greed comes into play, and they almost always end up getting up well beyond their skis at some point. And that's generally what I'm looking for, is those situations where they are really long or really short, and maybe we're getting to a point where all the buyers have reacted and they're already in the market and there's simply no one left to buy. Or on the other end of the coin, all the sellers have sold and there's no one left to sell. I mean, those are generalized situations, but they happen more often than you would think.
Yeah, and you brought up a really interesting time frame regarding the durations that you like to look at. Can you talk a little bit more specifically why you like to use these long durations as compared to using daily or intraday? Oh, well, not even that you can do intraday with COT report, but you get my point. These really short-term time frames.
Yeah, I'm not looking to see if they added this week or what they're doing next week. Honestly, what they do week to week is not a big deal to me. But what they've done over the last year or two, that's a big deal. For example, if you're looking at something like crude oil, we generally, as I mentioned just a few minutes ago, large speculators are generally always net long in crude oil. But we've seen them as net long as, I think, about 750,000 contracts is the all-time high. We've seen them just recently as last year. I think they were holding about 500,000 contracts. And interestingly enough, we up until maybe a month or so ago, they were only holding 140, 150,000 contracts. So you can see that um, when you see the difference between the all-time high versus how many long contracts were being held recently, there's probably, I mean, this is an assumption, and that's what we do when we look at these kinds of things, is we're assuming and making guesses. There's probably a lot of money on the sidelines that could potentially make its way into crude oil if an upward trend starts. And we've kind of seen that start in the, just recently, we've seen crude oil move higher as some of those large speculators have made their way back into oil. I would say the trade probably, like, this is something that I noticed. I don't know. This isn't always something that occurs, but I noticed in this particular situation, speculators were holding a relatively small net long position according to what we've seen historically in crude oil. While if you look at sentiment readings, we follow a couple of polls and sentiment indicators. Everybody was bullish crude oil, but nobody had actually reacted to that sentiment. So I thought it was an interesting dynamic. Usually, when you see the market net long or net short, you see the sentiment readings kind of match those. And in this particular year, we've seen the opposite. Everybody's bullish, but nobody wanted to buy.
Yeah. And I think what you're really highlighting here, and it's been kind of one of my guiding features as well for using the COT report, is this kind of extreme indicator, looking for extremes one way or the other. Another question I had for you to see if you have any sort of specific opinion on is, do you make any comparison between non-commercials and commercials, and when we see them at large variances, kind of like here or even here? Is that something you integrate?
To be honest, it's not something that I focus on. I glance on it. When I see like small speculators, I glance to see what they're doing. Small speculators are generally, not always, but generally they're generally on the wrong side of the tape. Again, that's a generalization, but so I'll look at them, but I really don't put a whole lot of my analysis into that. I pay attention to a lot of other, like when it comes to the COT report, I would never suggest anybody buy or sell something just based on the COT report. I think it's a very valuable tool. I look at it all the time. I wouldn't suggest a trade without looking at it, but at the same time, I think it's just one piece in a much bigger picture. People should also be looking at seasonals and technical analysis and fundamentals and those sorts of things. And then if COT aligns with that, then even better.
Right. And just to clarify, I was referencing commercials. So like producers, merchants, not the small speculators. I totally agree with you there.
Okay.
But the same question then for commercials, now that we know how you feel about the small speculators.
Okay, apologize for that misunderstanding.
Right.
I really don't focus on commercials either, because for a couple of reasons. The commercials are hedging. They're not trying to make money. They're trying not to lose money on their business operations. So that's what's driving their decisions. And also, the commercials and the large speculators are generally completely opposite ends of the stick. And so for the simple analysis that I'm using, or using the COT report for, it's kind of redundant to look at commercials when most of the time they're going to be at the exact opposite end as large specs.
Yeah, it makes a lot of sense. It's something I've kind of studied a lot myself out of just sheer curiosity. And it is interesting watching those extreme relationships. The one thing I would add to that is sometimes if you pay attention to both the commercials and non-commercials, it can make extremes a little easier to see if you're not used to looking at the COT report for that exact reason. Before we wrap up, one of the things I see a lot are people debating on just the overall efficacy of the COT report. As you mentioned, it's kind of part of a broader suite of your analysis tools. What kind of periodicity do you like to look at the COT report in? Is it something you look at weekly, monthly, daily? What?
I would say, honestly, I probably look at it at least once a day, depending on what I generally will do is I'll look at seasonality first. I'll pull up some seasonal charts and see what generally is happening in any particular time of year. And again, just like COT, seasonals aren't a fail-safe bet either. It's just a piece of the puzzle. So I look at seasonals, see what normally is happening, and then I look at charts and see what I think may unfold. And then I always look at the COT to make sure that that's not contradicting anything else that I'm looking at. So it's really just a big, like you said, a suite of tools. And I probably every day I would suggest keeping an eye on it at least once a week, but daily is even better.
Yeah, I think that makes a lot of sense. And last question for you. When people are looking at this each week, one of the things you mentioned we're looking for is if we're at extremes. Are there any other things that you think would be wise for people to look at? Not so much whether or not they're going to put on a trade or whatnot, but just for them to build their understanding of the product. Do you like to pay attention to the slope or anything else like that when it comes to the COT report positioning?
For my purposes, I've kind of streamlined my analysis, and I'm not saying I'm better than anyone else or smarter than anyone else, but I've found that if I'm looking at too many things, it just it confuses me, and you get analysis paralysis, and that's pretty common. So I keep it very, very simple. All I'm looking for is really large extremes one way or the other. Or let's say the COT report isn't giving a, let's say a trade's not overcrowded. Let's just say it's starting out. Large speculators are just starting to go net long in a particular market. In that situation, obviously, I'm not looking for some sort of counter trend trade. I might look to trade with the large specs as long as everything else comes into line. So I do use it for those purposes as well.
Yeah, I love it. I love how simple you keep it. That's one of the beautiful things about the way you approach this stuff, is that it's also really consumable for people, I think. So thank you so much for, sharing some of your experience with the COT report. Before we wrap up, where can people find you?
The website is decarleytrading.com, and it's spelled DECARLEY trading.com. And if you're on Twitter, at Carley Garner is the handle.
Got it. I'll make sure both of those are in the video description below. Everybody can find me at ES Invest on YouTube or Twitter, all the same. You're the bomb. Thank you so much for sharing some of your knowledge with us. And then I'm sure we'll gather again to take another look at these and see if we can dive even a little bit deeper. But thank you so much for your time.
Let's do it. Thank you.
Take care.